Welcome back to the Longacres Finance channel. It's time to take a look at the 10 best Dividend Aristocrats for October. September is almost over, and I don't know about you, but I'm ready for the month to end. This has not been a kind month for the Dividend Aristocrats, nor the stock market as a whole. September has historically been a poor month for the stock market, and this year did not disappoint. Or rather, it followed the same pattern of disappointing investors. Noble, the Dividend Aristocrat exchange-traded fund, has had a negative return during September for 4 of the last 7 years. And 2021 looks to extend September's poor streak to 5 months over the past 8 years. This means that September will be tied with January for the highest number of negative months during Noble's history. In terms of average return, January is by far the worst month for the Dividend Aristocrats, with an average January return being minus 0.57%. September has thus far had an average return of positive 0.3%, but with the ETF being down around 3.61% for the month thus far, it is looking like the average September return will get pushed down to negative territory, making September the second and only other month to have a negative average return. How far in the red it will go, we will find out in a few more days. The best average monthly return for Noble has come during the month of November, with an average gain of 4.23%. So hopefully we can quickly forget about September and look to brighter months ahead. But let's not get ahead of ourselves and focus on the upcoming month first. In this episode, I will present the 10 best Dividend Aristocrats for October. We will take a look at the 10 most undervalued Dividend Aristocrats, the 10 Dividend Aristocrats with the best expected growth rates, and a blend of these two strategies. After we take a look at the best Dividend Aristocrats for the month of October, we will take a sneak peek at how the September picks are doing compared to Noble with 4 trading days left in the month. Before we jump in here, if you're new to the channel, make sure to subscribe if you enjoy the content. And please like the video to help me push this content out to more people and keep growing this channel. Alright, let's start off by taking a look at the 10 most undervalued Dividend Aristocrats for the month of October. Valuation, like always, is determined using dividend yield theory, where we compare the current dividend yield to the trailing dividend yield. If the current dividend yield is larger than the trailing dividend yield, a stock is potentially undervalued, and vice versa. As of right now, 18 Dividend Aristocrats are potentially undervalued, but we will trim this list down to the 10 most undervalued aristocrats. In alphabetical order, we have AbbVie, that is about 8.5% undervalued, Atmos Energy, that is about 22% undervalued, Clorox, that is about 13.5% undervalued, Chevron, that is about 14% undervalued, Comet, that is about 11.5% undervalued, Hormel, that is about 19% undervalued, 3M, that is about 7% undervalued, AT&T, that is about 15% undervalued, VF Corporation, that is about 15% undervalued, and Walgreens, that is about 17% undervalued. The theory of buying undervalued stocks is that we are purchasing shares of a stock at a bargain price, which in turn should offer better than average returns over a longer period of time, from the additional alpha when the stock returns to fair value. Comparing the October selections to September, we have 3 changes. Cardinal Health, General Dynamics, and Exxon have dropped off the most undervalued list, and they are replaced by AbbVie, 3M, and VF Corporation, 3 great additions to the portfolio for the month of October. My theory for this strategy is that it will offer alpha or outperformance over the Noble ETF over a longer period of time. It takes time for undervalued stocks to return to fair valuation, and it isn't guaranteed either. Sometimes stocks can look undervalued, but in reality they are just a value trap. I think after a year or two, we should start to see positive results from this approach. Let's move on to the 10 Dividend Aristocrats poised for the highest expected future growth. In this strategy, we are looking at 2 variables. The first is the analyst's forecasted future earnings per share growth rate, and the second variable is the current valuation of the stock. Since we are using a 5-year earnings per share growth forecast, I take the current valuation and assume each stock will return to fair value during the same 5-year period. So if a stock is undervalued, its expected growth rate is boosted to account for the annual effect of a return to fair value. And if a stock is overvalued, its expected growth rate is lowered to account for the same annual effect of a return to fair value. The 10 best Dividend Aristocrats poised for the fastest future growth for October are Caterpillar with a 29% growth rate, Chubb with a 23% growth rate, IBM with a 16% growth rate, Illinois Tool Works with a 14% growth rate, Lowe's with a 16% growth rate, McDonald's with a 19% growth rate, Nucor with a 22% growth rate, Stanley Black & Decker with a 14% growth rate, Cisco with a 53% growth rate, and VF Corporation with a 51% growth rate. I know some of these expected growth rates may look a little unrealistic. I do not expect that each of these stocks will actually hit its expected growth rate. Analysts are routinely wrong with their forecasts, and their forecasts also change pretty frequently. But what I do know is that there is a correlation between earnings growth and share price appreciation. Companies that have historically grown their earnings faster have also seen higher share price appreciation. So theoretically, if we can estimate which Dividend Aristocrats will have higher future earnings growth, we can stand to benefit from better share price appreciation. Even if only a handful of these stocks hit their estimates, collectively the strategy should work and offer alpha to investors. Creating earnings forecasts can be a very time-consuming process, and it requires a level of expertise of the company and the industry. Wall Street analysts are supposed to be experts in their assigned field of specialty. I think it's far safer to rely on their forecasts than it is to create my own. Only time will tell if this strategy really works. There are 2 changes from the selections for the month of September. Albemarle and People's United have dropped off the list, and are replaced by Illinois Toolworks and Stanley Black & Decker. For strategy number 3, I have decided to do a blend of the first 2 strategies. First, I filtered the data for only potentially undervalued stocks. If you recall, we have a total of 18 potentially undervalued aristocrats right now. And second, I picked the 10 aristocrats with the highest expected growth rates. The 10 selections for the month of October for the blended strategy are A.O. Smith Corporation, that is about 2.5% undervalued and expected to grow at a rate of 8.5% per year. Air Products and Chemicals, that is about 5% undervalued and expected to grow at a rate of 13% per year. Atmos Energy, that is about 22% undervalued and expected to grow at a rate of 12.5% per year. Becton Dickinson, that is about 2.5% undervalued and expected to grow at a rate of 10.5% per year. General Dynamics, that is about 5.5% undervalued and expected to grow at a rate of 9.5% per year. Hormel, that is about 19% undervalued and expected to grow at a rate of 12% per year. IBM, that is only 0.03% undervalued and expected to grow at a rate of 16.5% per year. 3M, that is about 7% undervalued and expected to grow at a rate of 10.5% per year. VF Corporation, that is about 15.5% undervalued and expected to grow at a rate of 51% per year. And Walgreens, that is about 17% undervalued and expected to grow at a rate of 9% per year. There are 4 changes to the 10 best stocks for the blended strategy for September. Ben Franklin, People's United, Cisco, and Exxon drop off, and they are replaced by A.O. Smith, Air Products and Chemicals, Becton Dickinson, and VF Corporation. There you have it, the 10 best dividend aristocrats for the month of October, using 3 different stock selection strategies. I think the highest expected growth strategy should be the winner in the short term, but the undervalued strategy might catch up over a longer period of time. The blended strategy may also take a little longer before we can see if it holds merit. I think in order to prove that these strategies hold merit, and they in fact do offer alpha over Noble, I will need to have at least 1 to 2 years worth of results. Short-term outperformance will be nice to see, but I don't want to jump the gun and get excited too early. I started tracking these strategies in August of 2021, so thus far I only have 1 full month of data. In August, the Noble ETF was up 1.87%. The top 10 dividend aristocrats with the best expected growth rates cleaned up with a 5.12% return. The blended strategy also performed quite nicely, picking up 2.64%. And the undervalued aristocrats got off to a rocky start, with only a 0.49% gain. These results were in line with what I hypothesized. Let's take a sneak peek at how Noble and my 3 strategies are doing during September. The return I will be looking at is through September 24th. Noble, the Dividend Aristocrat ETF, is down 3.61% for the month thus far. Each of my 3 strategies so far is doing better than Noble. The best strategy is the most undervalued strategy, which is down 1.98%. The blended strategy is doing a little worse, as it is down 2.29%. And the highest expected growth aristocrats are down 3.02%, which is pretty bad, but still better than Noble. Let's take a closer look at each strategy to see which stocks are the drivers of alpha for this month. For the most undervalued strategy, the 2 main drivers of alpha are the 2 oil giants. Chevron and Exxon are actually offering investors positive returns during September, of about 5 and 7% respectively. Additionally, General Dynamics and AT&T are down a little over 1% for the month, which is better than Noble. Cardinal Health, Clorox, and ComEd are also outperforming Noble, with each stock being down a little more than 2%. For the blended strategy, the main driver of alpha is Chevron, with about a 7% gain. Additionally, People's United is up almost 3%, and Cisco is up a little more than 1%. IBM, General Dynamics, and Ben Franklin are in the red, but are all doing better than Noble, helping drive the return for this strategy. The highest expected growth strategy has 4 stocks with positive returns for the month. McDonald's is up over 4%, People's United is up almost 3%, Lowe's is up nearly 2%, and Cisco is up just over 1%. However, the strategy is hampered by Nucor, that is down over 14%, and looks to be shedding a big chunk of its phenomenal return this year. And VF Corporation is down about 10.5%. Albemarle, Caterpillar, and Chubb aren't doing as bad as the 2 worst stocks, but are all doing worse than Noble. We still have 4 trading days left, and a lot can happen during this short period of time, but I'm optimistic all 3 strategies will hold their ground. Once the month of September is over, and I have time to review the final performance for all the dividend aristocrats, I will release an update with the final September results. In addition to the September returns for each strategy, I will also run a mock buy and hold portfolio. I think a buy and hold approach for investing in dividend stocks is one of the best strategies investors can adopt. Therefore, I am curious to see how it performs for the best Dividend Aristocrat strategies as well. That's it for today. Thank you for watching and see you next time.